Yo, what is going on? It is Maleki, the growth and dividend growth investor. Welcome to the channel. In today's video, we will talk about why you should dividend growth invest. In today's video, we're going to talk about two topics. The first topic, we will discuss a graph about the power of dividend growth investing. And the second topic we'll talk about is a dividend growth investment portfolio example. This is going to be my portfolio, and I'm sharing this portfolio with you guys so that you guys have something to compare to. I would never tell you guys to do something that I would never personally do myself. As a side note, I am not a financial professional, so take everything I say with a grain of salt. This is not financial advice. Another side note, just because I am talking about dividend growth investing, I want you to have a comprehensive portfolio. I want this to be one part of a comprehensive portfolio. I don't want you selling all your growth assets to put into dividend growth investing. This is supposed to be one part of a comprehensive portfolio. What is dividend growth investing? Dividend growth investing is where an investor invests in a company that is growing their revenue as time goes on, as long as they grow their dividend payout as time goes on. In the S&P 500, the dividend increase year over year has been 5.4%. I work as a registered nurse, and my employer only increases my salary 2% a year. These companies are increasing my salary more than my own employer. So the reason why you would want to invest in a dividend growth investment strategy is because you're going to get share price appreciation as well as dividends paid out to you that increase over time. Warren Buffett is one of the most known dividend growth investors. For an example, Warren Buffett bought Coca-Cola many years ago, and he bought Coca-Cola at a point where it was increasing its revenue over time as well as increasing its dividend payouts as time has gone by. Now, Warren Buffett gets paid out $656 million from Coca-Cola alone just for holding on to a company that was a dividend growth investment company many years ago. This is a dividend calculator by MarketBeat, so you guys should definitely check it out and play with that, because that is an awesome calculator that I spend way too much time looking at. So you have a portfolio. Most dividends are paid quarterly. We are going to dividend reinvest. So I'm going to be using my Roth, where I have my dividend growth investment strategy. So what I'm doing is I'm starting with $12,000. Every single year I want to max out my Roth. So I'm going to contribute $6,000 a year, and because it's a tax advantage account, we're not going to be paying any taxes. The annual dividend yield of my portfolio as of right now is 2.36%. If I use the S&P 500 average dividend increase, it's going to be 5.4%, and the expected annual share price appreciation should be 7%. I don't care too much about the appreciation as much as the dividend increases. So I'm 27 years old. I want to retire at 60. So if you add 33 years, this is what my dividends will be paid out. You'll notice that with the dividend growth investment strategy is early on you're not going to be getting paid huge swaths of money dividend growth investing. But as time is going on, that money, the shares that you bought earlier, those dividends have increased over time. So, you could have started buying out a dividend yield of 1%, and then by the time you retire, it could be 10-15%. So this is the power of dividend growth investing. So if we scroll all the way down over here to when I do retire, look at that. This is the power of dividend growth investing. You would have $3.4 million worth of principal, and you would have $455,000 worth of dividend payments. It's crazy. $455,000. This is why Warren Buffett makes so much money off Coca-Cola, because at this point his dividend has increased year over year, and that's why he's getting paid out $656 million. Now, we're going to switch over to my portfolio. In my portfolio, I have my dividend growth investment strategy in my Roth IRA. If you look at this portfolio, my yearly return is about, it's 53% over 5 years, which comes out to about 10% every single year. Ideally, we'd like to have 55 holdings. I only have 42 right now. I did add some that I would like to invest in. So once I keep funding my account, I'll start acquiring some of those shares and some of those companies. Dividend yield 2.36% and a zero expense ratio. I have no ETFs in this. To build this portfolio, what I did is I went through all the dividend appreciation funds and I picked the biggest companies with the highest market cap to put into this portfolio. To kind of sum everything up, I'm not going to go through every single one of these sectors, but the main idea is to pick companies that have a high future potential to grow. That's all I'm really going to say about these. If you want to see all my individual holdings, you can check out my M1 Finance Pie. So you can check that out to see what's inside of it. But pretty much, this is kind of what I have as a portfolio. And if you want to check out the actual holdings, you can check out the pie. Now in this spreadsheet I have over here, I don't care too much about share price appreciation. I care about dividend increase over time. In this portfolio, that's exactly what I want to see. So if you look in January 2020, since I have more data now, I only made $2.09 in dividend income. But if you look at January 2021, it increased all the way up to $59.69. If you look at February 2020, it was $121. If you look at February, $31.13. What I'm pretty excited about is seeing what the payout will be in March, because in March of last year in 2020, I got paid $51.72. So hopefully in March 2021, it will go up. Just kind of going over this little spreadsheet. So last year, my dividend yield was 3.035%. That dividend yield was higher because I did have an ETF that had a very high yield. It almost yielded 10% dividend return. And what that ETF did is it sold covered calls. I wanted to get out of that because I wanted to not have any ETFs in this portfolio. I didn't want an expense ratio. And I just think that I was really focusing on a dividend growth investment strategy, and having an ETF like that, I think would be counterintuitive. So I got rid of it. So going into 2021, my actual yield might be a little bit lower, but that's fine because over the long run, just like that other graph, that other page we saw, it's gonna increase over time. So I just wanted to kind of show you guys my little Excel sheet I had here. This is part of my favorite segment, the final word. The main idea of making this video was to show you the power of dividend growth investing as well as an example portfolio. Pretty much, you're not going to learn dividend growth investing in a 10-minute video about it with a random dude talking about it. What you need to do is you need to go down the rabbit hole and really research this yourself. I'm the type of person where I don't think any idea is stupid. I'm the type of person where, you know what, if you have a great idea, I will look into it. And that's kind of the mentality that I want most people to have. I put this information out. I showed you the power of dividend growth investing. Now the ball is in your guys' court to do what you think is right. I really appreciate you guys watching the video if you watched up until this point. If you can, don't forget to like, comment, or subscribe. It would really mean a lot.